The Fidelity China Special Situations Fund is a London-listed UK investment trust, which is now approaching a market cap of around 1.2 billion sterling, and offers direct exposure to the Chinese growth story. We're delighted to be joined by Dale Nicholls, over from Hong Kong, and is the portfolio manager of the trust. Dale, thanks so much for joining us.
Thank you. Good to be here.
I think to kick off, I appreciate that the portfolio is chosen from a bottom-up perspective, but we can't not talk to you and find out your sort of macro view. Chinese markets have gone through quite a significant rebound over the last 12 months, following what was a pretty challenging kind of mid-period of 2015 and early 2016. But clearly worries still remain over growth of the debt in the country. I wondered if your outlook for markets has changed at all over the last 12 months?
I don't think so. My thesis, pretty much remains the same. You mentioned the debt problem. I think that is still my greatest concern, and the debt continues to grow, although at a slightly slower pace. But I do think there's an increasing focus from the very top around the risks of growing debt. We've had recent meetings that really indicate from the very top they're more concerned about the risks, and I think, particularly post the leadership transition that we see at the end of this year, we could see renewed focus on that. Will be, I think, an opportunity for President Xi to build on what is already a really strong position. And I do think, his view is clearly more focused on the risks versus growth. In terms of, the markets, perhaps I think there's an increasing realization that despite these concerns, the concerns are manageable, and yet, I think as we've talked about in the past, it's a very diverse economy. You've got parts that are growing significantly as well as parts that are declining. There's real areas of structural change. So again, if you're focused on the companies that are benefiting from the structural change, there's real opportunity. And I think as earnings for those companies have come through, that's probably been recognized somewhat by the market.
So the portfolio has a very much a consumer-orientated focus. I wonder if we maybe pick up on one particular stock that you think kind of exemplifies the growth story of the Chinese consumer.
I think perhaps a good example is a company called Ctrip. So Ctrip is by far the dominant player in online travel in China, both through airlines, but more importantly through hotels. And travel trends have remained very strong in China, and I think it's a reflection of really just natural development of the middle class. But you've seen very strong or consistent double-digit growth both domestically and overseas. Ctrip is benefiting from that underlying trend, but obviously even within that trend, you've got things moving online. and having acquired the number 2 player, they're in an extremely strong position. It's very hard, for anyone to really compete with them. So it's a story I think that just can play out really over 5, 10, 15 years. Very, very well positioned. So that's a core holding in the portfolio.
Another kind of allocation within the portfolio is to state-owned enterprises. I wonder if you could run through what the opportunity set is for you there.
Yeah, I mean, for me, still the real focus is about the private companies. I think that's where the real opportunity is. And I think, again, when we look at over the long term, it will be the private companies that will take the majority of the share of growth, of investment, of employment, et cetera. So I think that's where the real opportunities are, particularly given that they do tend to be more focused on the new economy areas. But, I don't ignore the SOEs, particularly the ones that have really good assets. And I think about the potential to improve the returns on those assets. So an example would be the airports, and that in many ways plays into the travel theme that I mentioned earlier. So you've got really good assets, particularly something like Shanghai International Airport, which is benefiting, has hub status and benefiting from those travel trends. You've also had Shanghai Disney built now up and operating, doing extremely well, so you're benefiting from that as well. But also, I think real potential to improve the returns on what is a really good asset. You've had some pricing adjustment in the aeronautical side, but there's also real opportunity, I think, to improve the returns on the non-aeronautical side. It's not the best retail and F&B offering, and I think there's real potential upside, in improving the returns on those assets.
The trust is able to invest a small portion in unlisted investments, and I know there's been a few new investments in that area over the last 12, 18 months. Right. And are you able to give us a flavour of the types of investments in that part of the portfolio?
Yeah, it's diverse. I mean, When I say it's diverse, it's diverse within the tech sector. That's generally where the focus has been. We're looking across the whole market, but that's where most of the opportunities have come to date. But I mentioned earlier about some of the structural changes we're seeing on the ground. Many of the trends that we're seeing globally are just happening faster in China. So an example of that would be my biggest holding, which is Didi Chuxing, which is effectively the Uber of China. A very strong position now, having acquired Uber's business. As they're by far the dominant player. And if you just think about the growth of that market, they're delivering over 19 million rides a day, which is more than Uber Global. So it gives some indication of the way things are just moving faster in China into these new business models. So that I've got a couple of names that I think to play into similar themes in the China growth story.
And the trust also has a number of other tools at your disposal, such as gearing and the use of derivatives. I wonder if you can maybe touch on your kind of current exposure and how that plays out in terms of your outlook over the sort of medium term.
Right. So the gearing now is about at 124% gross and about 116 net exposure. The net exposure has come down somewhat, and I think that's kind of natural. You'd expect that to happen as the market's moved up. I have taken some money off the longs that have done well and added to some of the shorts. I think as we head into the second half, we've had really some pretty strong runs in some of the more cyclical names, and as things do start to slow, I think there'll be more potential shorting opportunities in some of those names. But as you can tell by the overall net exposure, I'm still finding a lot of potential upside on the long side as well.
Dale, thanks so much for coming in and giving us an update.
Thank you.
If you'd like any further information on the Fidelity China Special Situations Trust, please contact your investment manager for a copy of our research notes. Thanks very much.